Bankwest raises interest rates by up to 70 basis points. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at a recent release from Bankwest, well, today owned by CBA, where they're raising their interest rates by up to 70 basis points on some of their loans. Now we're definitely getting a lot closer to 5%. Today at 2:30, we should be seeing the RBA announce if they're going to lift the cash rate. All of these increases we've seen now are on fixed rates. We haven't really seen the variables creep up as much. So what you'll do is you'll have people like me who didn't trust our Reserve Bank governor for some insane reason fixing our rates. Now, once that fixed rate period expires, we're going to see a jump if we fix again, or even if we go to variable, we're going to see a jump. I suspect most people, at least those of you watching, are preparing for that. Although most of the viewers, at least according to the poll I put up, thinks I'm being unnecessarily hopeful and optimistic, that people are preparing, and I think most people have their heads in the sand. Let's hope I'm right here and people are preparing. We'll see. Maybe I'm being too optimistic. So let's have a look here, what we're seeing here. Now, here you have one-year terms. These are, complete fixed home loan owner-occupier. Now, LVR of less than or equal to 80, you're going from 2.39% up to 3.09%. So that is the biggest jump. That's a 70 basis point increase. I mean, tell me, why would you fix for 1 year? Maybe you just want that certainty for 1 year, or as a way to get in, to lock it in, and then you think variable rates will be more attractive after it. That could be why. But there you go, guys, 3.09. Then we have another one, 2.89 up to 3.29, 3.49, and 3.99. 1 year, less than 80% was the biggest, but looks like we have nothing below 2%, below 3% anymore. Remember, let us know in the chat, guys. Raise your hand if you got under 2% mortgage interest when you fixed in. Remember that? There was some viewers were even sharing how they got even less. Like, I got 1.99. I couldn't be bothered shopping around. Other people got even less than that. One viewer was explaining how he'd played one bank off the other. You know, he was going to jump ship mortgage to another bank, and they were even going to offer him like $2,000 to jump ship. And he went back to his original bank, and they said, "Oh, we'll match that, and we'll pay you the $2,000." So then he went back to the other bank, and they said, "Okay, take that, wait 30 days, then jump ship to me, and I'll pay you another $2,000." So he played the banks off each other and got a great deal. I mean, that's what you have to do. At least with your mortgage, ring up every now and then, ask for a little bit of a discount. At least be aware of what you're paying, and be aware of the increase that we're going to see soon. We have a look here. 2 years. We can see 3.39, 3.59. They're all going up. 4.29 for, what do we have? From 4.09. We keep going down. We'll go to, I like the 4-year one. Oh, here we go, 3 years. We're finally seeing above 5%. There you go. We're finally seeing above 5%. So, I mean, and that's including LMI, 98%. So this is all the people that were dragged in by the government with these special deals to get into the housing sector. They're finally going to start copping it. I mean, there you go. We keep going down, 5.49% from 4.69. We have 5 years. 5 years, and you're going from 3.89 to 4.69, and depending on your LVR, how high it goes, 5.59%. So the people who are the greatest risk to the bank have to pay additional interest. And this is where the government is stepping in and getting more and taking the risk on. So we're taking the risk on for all these people. Hopefully they'll be okay when interest rates go up really high. Because honestly, saving the deposit is the tough part. But getting an insane mortgage at 2%, that's going to overheat the market too, guys. And then that flows through to the rest of the housing market. But it's the Australian way. Here we go, investments. And again, you've got increases. What are we looking at? 3.19 to 3.29, 3.29 to 3.5. We go 4 years, 3.89 to 4.79. There you go. There's a 90 basis point increase. And we've got fixed home loan owner occupier. 1 year again. Yeah, everyone, we're seeing these increases all across the board. Many more fives. Many more fives, everyone. Really close to 5%. 5.09%. So interest rates are certainly climbing up. Now, the RBA rate tracker, everyone, and this is looking at the chance of the RBA increase or decreasing rates. I don't know why they don't have increase, but anyway, they'll have to flip to that. But there's a 64% chance as of yesterday that the RBA will not increase rates, and a 36% chance that it'll decrease to 0%. So we'll have to see at 2:30 if rates are going to go up. And for those of you that are playing along at home, the cash rate is at 0.1%. I haven't really updated this chart in some time. I wanted to see how long I could get away without not updating it. But there you go, everyone. We're sitting at that. So let's have a bit of a talk about this. 5% interest rates are becoming more common. We're starting to see it. They're creeping up. And here's the thing. The impact this will have on people will be delayed. It's going to have there'll be two sides to it. It's going to be delayed for those that have fixed mortgages because you've got a window of opportunity to prepare for it. But it's going to dampen the ability of people jumping in to new housing to purchase. And we're starting to see this already happen in Sydney and Melbourne, where housing is cooling off, where the expectations of what people can get in prices are differing from what they're actually getting. You're seeing it, 5%, 10%, 11% shave off prices. So it's starting to cool down. Now, here's the thing. A 20%, a 30% decrease in housing, that's going to, let's bring up a chart here, because this is worth looking at. If we have a look here, this is property prices. And actually, no, I won't bring up this one. I want to bring up this one, asking prices. And we'll just do, this is capital asking prices from SQM. And let me just full screen it so I can look up here. Now, if we see here, guys, you can see, what are we looking at? All houses, this is all capital cities, 1.2 mil. Now, say we took a 20% cut in all housing all across the country. I know the market is more nuanced and it's more, the different areas have different opportunities and different advantages, but just say we go back 20%. Okay, so we're sitting at only 2021. Well, let's say we're at 1.2 million. We go back even further. We go back to 900,000. So we're starting to lose a decent chunk. Houses from all houses are down from 1.2 million now down to 900,000. That would be blood in the streets there. But you're still only back to 2019. We even go back, let's say, can we even go back to half? Do they even have it on this chart? Yeah, here. So half, if we had 50% fall in houses. Now that's what happened to some parts of Ireland when they had their crash. You're looking at 622,000, and that's 2009. That's a whole lot of growth lost. And some people are hoping that will happen. Some people are expecting it to happen. Now, I'm going to do a video about how Australia isn't the same as Ireland, how there are some differences in our housing market and our economy compared to Ireland, and I'm working on that. We'll look at that later, because we're often making the comparison between the two countries, but there are actually some differences. And I know it's a broken record saying, oh, well, Australia's different, but in some ways we are. In some ways we are. We still have, look at the yields in housing. They're still positive compared to bonds, and that's over in risk-free in Ireland. That was the big signs that the bubble was about to burst, when you could make more money buying government bonds than you could on the yields on houses. Look at the yields in Brisbane and Sydney; they're still pretty good. So that's kind of a warning sign. Can it go even more? Well, anyway, guys, thank you all for watching this episode of Heise Says. Let me know your thoughts and opinions on this one in the comments down below. And if you're a fan of the channel, there are a few ways you can help out. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, or use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, everyone. Have a great day. I'll try and get another video out later today to see what the RBA says, but I've got to finish, put a second coat on my house. So I'll be painting after this video most of the day. So take care, and let's see what happens. Bye for now.